Elon Musk is the charismatic CEO behind SpaceX, Tesla, Neuralink, The Boring Company, and likely many others as well. Over the years, Elon and his outstanding team have accomplished several previously unthinkable tasks in the space and automotive industries. And most would agree that many of these companies likely wouldn't have survived without Elon, at least not in the early stages. Thus, it's hard to imagine Elon Musk getting fired from one of his own companies. But like Steve Jobs and Apple, this is precisely what happened with Elon Musk, as he was forced to resign as Tesla's chairman 2 years ago. And to this day, he has yet to be rehired. So what happened? Well, starting off, as you may have expected with individuals like Elon Musk and Donald Trump, the entire conundrum originated on Twitter. Prior to his incriminating tweet, he had been messing around with taunting tweets for a couple of months at that point. Most of these tweets were targeted towards short sellers who had short positions on Tesla. If anyone doesn't know what short selling is, the process itself is a bit complicated. But all you need to know is that people who are short selling make money when the stock price goes down. So essentially, these individuals are betting against Tesla. And of course, if you're the CEO of a public company, you aren't particularly fond of short sellers, especially when they have made your company the most shorted stock on the market. Considering this, Elon would often taunt short sellers that they were going to lose millions, if not billions of dollars when Tesla stock skyrockets. One such tweet was, "They have about 3 weeks before their short position explodes." Clearly, Elon was already walking pretty close to the line, and this would blow up when he tweeted, "Am considering taking Tesla private at 420, funding secured." One thing to note is that this figure is before the stock split. So in today's stock prices, Elon basically claimed that he had funding to take Tesla private at $84 per share. This would have been fine if they had paperwork started and were actually making serious progress towards closing a deal to make Tesla private. Even then, Elon really should just wait and make an official statement as opposed to posting on Twitter. At that point, the deal to take Tesla private was just a proposal, and funding wasn't really secured. Elon Musk had some meetings with Saudi Arabia's sovereign wealth fund in regard to taking Tesla private, but nothing was certain. In fact, the purchase price of 420 was kind of a meme. Elon got the number by adding 20% to the current stock price, which gave him $419, and he decided to add $1 because of April 20th. But clearly, the Security and Exchange Commission didn't find it nearly as funny as Elon did. To add fuel to the fire, Elon later posted that the only reason the deal may fall through is because of shareholders voting to decline the deal. Right after Elon tweeted these statements, Tesla stock skyrocketed as buyers flooded in. This makes sense, as if funding really was secured at $420, buying in at any price under $420 is basically guaranteed profit. This stock soared 6% in less than an hour to $381 when the Nasdaq decided to halt trading of Tesla stock. They did reopen trading, however, later that day, which let the stock continue to rise, and it ended up a little under $400. The reason this is dangerous is because such artificial rises in stock price could result in a lot of investors losing a lot of money if the deal doesn't come to fruition. If the deal fails, the stock price will no doubt crash back to where it was originally, if not even lower. Thus, all of the investors who bought in on the false promise that Tesla was going private at $420 would have lost money. Consequently, the SEC charged Elon as well as Tesla for securities fraud soon after. The SEC actually offered Elon and Tesla a settlement deal, according to the New York Times. This deal apparently proposed that Elon would have to step down from being chairman for 2 years and pay a $10 million fine. However, there was one detail that is thought to have pushed Elon away from taking the deal. The settlement required that Elon could neither admit nor deny whether he was actually guilty of securities fraud. Since Elon rejected the deal, the SEC launched a full-scale investigation into Elon and Tesla in August of 2018. And of course, the SEC determined that Elon was indeed guilty of securities fraud, and they charged him and Tesla $20 million each. Elon was fined for making the statement, and Tesla was fined for failing to have disclosure restrictions in place, which would have prevented Elon from posting such a venture on Twitter even if it was indeed finalized. Aside from this, Elon had to step down as Tesla chairman within 45 days and could not be rehired for 3 years. As a result, Robin Denholm replaced Elon Musk as Tesla chairman in late 2018, and she is still Tesla's chairman today. And finally, all of his public communications regarding Tesla had to be overseen by Tesla's board. So, what was the long-lasting impact of this decision? Well, Robin Denholm has expressed that shareholders want a more boring Musk, but really, not much has changed. During the height of this event, Elon Musk actually went out to Joe Rogan's podcast, and we all know what he did. Though this isn't that big of a deal, as it is illegal in the state of California, this made many Tesla employees quite mad, as they have to go through drug testing. Moreover, Elon Musk continues to post whatever he wants on Twitter, and he has even gone on air stating that his tweets are rarely overseen. He states that only tweets that may affect the stock price of Tesla have to be reviewed by Tesla's board. But it doesn't seem like these are reviewed either, as he has also admitted,
I want to be clear, I do not respect the SEC. I do not respect them.
But you're abiding by the settlement, aren't you?
Because I respect the justice system.
With such an attitude, it's no question that nothing has really changed. Just this year, Elon tweeted, "Tesla stock price too high, IMO." This itself is not something that's okay to say as a public CEO, and this no doubt led to Tesla stock crashing 10% within minutes after the tweet. I'm honestly surprised that the SEC did not get involved with this one, but he did receive a lot of backlash from his own Twitter community, as many of them are heavy Tesla investors who lost tens of thousands of dollars, if not hundreds of thousands of dollars, within hours. I think it's pretty clear why this is not appropriate to say, even if it was true. But if we take a closer look at the tweet, we can see that it's actually much worse than it seems at first glance. This tweet was posted on 5/1/2020 at 8:11 a.m. Pacific time. And guess what? On August 11th, a 5-to-11 stock split was announced. You get it? 8:11 a.m. August 11th, May 1st, 2020, 5-to-1 stock split. Elon says stock price is too high and the stock split is announced. You can definitely just dismiss this as a bizarre coincidence. But given that it's from Elon Musk, I think we'd agree that it was likely much more than just a coincidence. So really, Elon basically leaked a stock split 4 months before it actually went through. If this theory could be proved, I'm sure the SEC would not be happy. But even without proof that this is what Elon was up to, I don't think that the SEC was very happy nonetheless. After this, we saw Tesla shorts, which were a pretty strong indication that Tesla was indeed profitable during the second quarter of 2020. And more recently, Elon Musk both hyped up and cooled down expectations for Tesla Battery Day. For instance, he tweeted things like many exciting things will be unveiled on Battery Day, and before that, he had claimed that Battery Day was one of the most important days in Tesla's history. But later on, as expectations were unnaturally inflated, he posted that these new innovations will not make a serious difference till 2022. Evidently, Elon's tweets have always been and continue to be quite influential to Tesla's stock price. And one of these tweets cost him his position as chairman of Tesla for a minimum of 3 years. We may very well see him be reappointed as Tesla's chairman late next year, but in the meantime, he'll just have to settle with being CEO. Personally, as a small and young investor with just a couple of Tesla shares, I don't mind Elon's questionable tweets. Honestly, I find it kind of funny to see how his tweets affect the market, and it's pretty interesting to try to puzzle together what his cryptic tweets mean. But of course, I'm not the only person investing in Tesla, and it's definitely not okay to put investors with tens of thousands, hundreds of thousands, or even millions of dollars in Tesla through such a roller coaster. So, for their sake, I do think Elon should pull in his tweeting just a little bit. How do you guys feel about Elon's Twitter episodes? Comment that down below. Also, if you guys thought this video explained the situation well, then make sure to drop a like and consider subscribing to see more questions logically answered. But until then, I'm Hari, and I'll see you guys on the next one.